Good morning, metalheads. This is Brad with your Noble Precious Metals Report, and today is July 20th, 2021. We are on a Tuesday, and we are coming off of what's been a very eventful couple of days. And I just wanted to take a few minutes today and do something just a little bit different, which is focus almost exclusively on the retail sector today. I know that I've spent a significant amount of time going over the paper markets and the economic factors involved, but I think that's important for us to really look at what retail's doing in terms of the price drops and what we can expect moving forward. So just to get started, I do have the futures chart up just so that we can get kind of a basis of what's going on, establish some context and some ground rules for moving forward. So as we can see, we've kind of begun this oscillation point of looking at all of this stuff. The price hasn't really dropped. It hasn't moved up. We're still just kind of screaming through just in this languishing period. Unless something really changes today, I kind of expect a similar maneuver to occur. Regardless of that, this is kind of a good time because we can see that in a non-moving market, one that's just kind of moving relatively horizontal, we can see kind of what the retail pricing has to do and how that's going to be affected. So real quick, just bringing up the silver gold 5-day comparison. That way we can see exactly where everything is. We can see that right now over 5 days, silver is down 4.72%. Gold is actually down on the 5-day average of 0.25%. Kind of an interesting little dynamic shift that's gone on. But, we can use this to our advantage. And of course, the gold-silver ratio is currently sitting at 72.67 for the market-to-market ratio and 63.71 for the non-market-to-market, the retail-to-retail. So let's dive into retail silver. And this is where I'm going to be spending most of my time. Now, we can see on this chart that over the last 3 periods, prices continue to decline. This shouldn't be a surprise if you tuned into me anytime over the last few days. And we can definitely see that distinction going down if we look at the generic 31.53 to 31.48 all the way down to 30.82. Not a huge surprise. If we go into the Philharmonics, we see 32.90 all the way down to 32.52. We did have that bump last week of 33.06, but that was kind of the anomaly across the entire board for what we're looking at. And even the Maple Leaf, we can see that steady decline, 35.84 to 35.71 to 34.90. And of course the American Eagle, which, rises to the top of everything at 42.18 2 weeks ago, 41.93 last week. And now we're down to 41.46 on average. We can see the trend. We know what's going on. We can understand that. And just based off of that alone, there can be some hesitancy involved in, making a purchase or something. Is this trend going to continue? Where's the bottom of the market? All of these various things that go into any type of investment strategy if you're not doing a steady purchase. And it's normal. And part of what really has to be looked at is how are you trying to acquire? What are you trying to acquire? And what are your ending goals on things? As you start to look at that, that's where the decisions can come in. And that's why I'm always in favor of, with any investment, making a plan on how you want to attack it, how you want to approach it, and where everything's going. Because you'll know if you say that you're going to purchase, say, 5 ounces of silver per week for the next year, then it doesn't matter what this number is. You're purchasing the 5 ounces. You're going to have, at the end of the year, 52 times 5, and you'll be able to divide the overall cost, the total cost that you spent across all of those ounces, and arrive at a dollar cost average, which is exactly how, if you're purchasing stock or anything else, how that gets calculated as well. So it's all part of the investment strategy. If you're looking to try to speculate on things and try to get the absolute best value at the best time, then that's a little bit different. And then you want to start, tracking the charts and figuring out where everything is. However, I can provide you here the market dynamics, what's going on, why it's happening, what we can expect, things of that nature. If we start looking at the average prices, this is a great time to kind of be going through this, because one of the things that we've seen is with this shift. I mean, we've dropped. I believe the price was 26.46, and it dropped down. I mean, now it's saying at 25.17. So we've had about $1.30 drop. So we can kind of gauge where things fall on how the market moves, where retail is falling, what that relationship actually exists, and how it kind of plays out. And we can see even here the average price for, this is a 1 ounce generic. The average price was $31.34 when we started out on July 15th. We are now down at $29.91. So I'm not going to embarrass myself by quickly doing the math this early in the morning. But we can see that the price is declining at a slightly different rate. We have had certain aspects where that gets dragged around, because there isn't necessarily a correlation between the lows and the highs as there is the average. The average is that leveling aspect of the numbers as we see them. But the average provides us with one centralized unit that says where do all these numbers fall in agreement. And we can see on the 15th, although we had the average at 31.34, the actual low price was 30.81. Today, the low price is 29.11. So we're, about $1.80 off? So the lows have actually declined in advance of the average, or of the spot. However, the highs, if we go through, we were at 32.34. If we go all the way down, we're at 31.13. So we're $1.20. So even at that point, the high prices aren't declining as fast. So the average tends to meet in the middle. The median provides us with what is actually the distribution and where that middle point falls. So when we look at something like this, I mean, the generic, that all factors into what we're trying to look at. But let's look at something like the Canadian maple leaf. The Canadian maple leaf, if you're buying at the top of the market, $42.35 back on July 15th, you're probably shopping on eBay. You're probably shopping, someplace that quite frankly is gouging you. Because I think that's absolutely an insane price for a Canadian maple. However, on the lower end of the spectrum, $32.59, that's not that bad of a price. Nor is the median at $33.82 or even the average at $35.76. But we also have to remember where spot was at that point. However, right now, given that spot is currently at $25.21, as I'm just kind of watching it while going through this, the low price is at $29.76. So that's actually a pretty decent deal. We're looking at $4.50 for $4.55 on the low side. But we can see that we're starting to move into this weird anomalous area where we're getting a dip in this price, which is dragging down the median to $32.45, which seems about healthy for me, as well as the average at $33.76, and of course, whoever's smoking crack at $41.15. I'm not sure, but I have to assume that someone is buying at that price. I hope that it's no one that's listening to this. I really do. One, because at that price, you're just not shopping. Shop around. Look around. You can find better prices. Don't pay that. That's dumb. But moving on from that, so we can see kind of this overall shape. And this is interesting for the bottom aspect of what I'll call a premium silver piece, is that you're seeing this bottom that's moving, because people are more aggressive, especially towards the lower end of the spectrum of moving prices. Sometimes there are certain factors that come into play, especially with the bigger distributors, where they want to move things, or they run a special, or there's a quote unquote sale that's going on, something like that. And oftentimes, if you look for those, you can generally, find some good deals on these things that are better than what would be normal. I mean, if you're comparing a Maple Leaf to just a plain generic, yeah, you're going to spend more. I mean, that's obvious. If you're comparing a Ford Fiesta to, a BMW M5, you're going to spend more on the Beamer. It's just natural. It's the difference between the base retail or the economy retail versus a premium retail. And a sovereign mint is going to produce a premium retail product. So it's important to look at this stuff. But if you are a savvy shopper, if you look around, you're going to be able to find the deals. And again, most of this discussion when I talk about finding the deals is limited to the primary sale, the first sale. So you're looking at your big distributors, the guys who are purchasing direct from, the Canadian Mint or the US Mint or whomever. So looking at something like that, we can understand where prices are going and that people don't always have complete agreement over where the price is. Now, going down, one of the things that I did find that was pretty interesting as I was looking through all of this is that, again, I'm still on the 1 ounce generic silver. This is something that comes into play considerably as we start entering into a period of price fluctuation like we're in right now. Is there is always a perception that prices are advancing or declining opposite where spot is, or if there's some sort of regime change that's existing. And this is the type of graph that exists to say, no, not really. And one of the things that we can see is that in terms of absolute dollars, this is a 1 month view. So on June 20th, we saw that there was on average a margin of $5.49 over the spot price for the retail sale of generic silver. As we go all the way down, we have seen that that's declined. I won't say significantly, but it's declined to $4.79, $4.79.5. So we're looking at, was that a 60 cents, 70 cents decline in the absolute dollar price. Now, if we go back and we look at the percentage involved, the percentage over, we had, 21.48% in margin. Whereas now we're saying they're looking at the last reading was 19.03%. So we have had a decline, but it's not a significant decline. It's about 2% decline overall. So that really isn't anything to write home about. But there is this perception that, premiums are falling or premiums are growing or anything like that. And the thing that we're not seeing is if premiums were falling, I'm just picking an arbitrary point, we should see something that looks like that. We should see a pretty aggressive slope, but we're not. As we start to look at that, we're seeing more of really, here's a straight line. And you can see it's a very, very slight angle. If I had to guess, I'm going to say 7-8 degree angle, so somewhere in there. So we're not looking at anything that's more than just a very narrow slice of the pie. And even if we look at the margin, the percentage margin, there's not a significant amount that we're seeing that's a real steep degree. And even as we go through and look at this further, if we actually start to draw the line and we start looking at all of these different points where things have changed, we can see that there's a pretty interesting little ripple effect that's occurred. That it's not necessarily a straight line. We've seen the ups and downs on margin that have gone through. So these are things to keep in mind. The biggest impediment to a stacker is going to be the internal biases that they keep, and looking at not the data, but the mythology surrounding it. You have to be cognizant. You have to be aware of what's going on, because it's not as easy. The data just doesn't exist. I think that I am about the only person out there that has this data and is quantifying it the way that I am. You can't just go to Yahoo Finance and pull up retail data on silver items across the board or anything like that. It's something that you have to take the extra step. And if you put it together, it's not that difficult. Or chat me, message me, whatever. I mean, if there's something that you're looking for, let me know. It might not be an immediate thing, but I might be able to do the collection on it and be able to provide the analysis. So the resources do exist, even if it does happen to be, some dude with a disembodied voice on YouTube that shows lots of charts. The last thing that I want to get into is I do want to do a couple of regressions because I want to show you how things are moving. This is important because this allows us to look at how the prices are moving and how the trends are existing. This is really where the metal meets the road. So up here on the graph, I've got a 1 ounce silver generic. Not a big deal. We know what these are. They're just, whatever generic bar you're going to find at whatever retailer. This is the average price, and this constitutes a 13-week look back from April 21st through today. Basically what this does is I've taken the time out of it. So I've not plotted this in a time series. I've put this just in terms of at any given point in time, regardless of what it happens to be, how does selling price in comparison to spot at that particular point? And I plotted on the graph. And then I started looking at, okay, what's the difference between those two values? What's the difference between spot and retail? And I assigned each of those basically a color gradation. You would assume that as you're in this range, that everything would be green, which primarily it is, because of course this number is much smaller. As we got up here, you would expect that this would be red. You should see basically a correlation that goes all the way up, that goes across the color bar as the price starts to increase. But we don't see that. Generally, we're in the middle here. So we can see right along the line, as we go through this entire middle section, we're seeing that the price is right in here, all the way across the board. Where we aren't seeing it is as the price starts to climb above, it starts to get away from this green line, which is a linear regression. And I'll get into that in a second. But we're seeing the red above and we're seeing the green below, because those are anomalous times when price isn't falling strictly within the groupings. So we're seeing this in a completely different context. And the reason why this is important to me is because I've got a couple of regressions on here. One is a regression for fit. This kind of a purple line. It's a low S trend line. And what this does is this looks at all of the dots that are on the graph. And it attempts to create a line that captures as many of them grouped together as possible. So it's basically a measure of continuity. And the straighter that line, the straighter that, the more grouped or more uniform the distribution is. So looking at that, that gives me a good indication of, okay, this is a pretty well grouped thing. And we can see that it's not, because this is a curved line as we start looking through it. So we can see that, there's some below, there's some above, and as the entire line goes, there's kind of a curve. It's not a straight line. Now, the linear regression that I have is essentially taking all of these points, doing some calculations on them, figuring out how far away they are from each average, and plotting a straight line that cuts through based off of these values. And some of those are going to be much farther than others. However, what this does is this provides us two things. One, the straighter the purple line is, and I'm calling it purple even though it's more of like a fuchsia, I guess. The straighter that this is, the more adherent the green is. So they both work in tandem to kind of verify each other. And if you haven't guessed already, based off of my adherence to basically sticking averages and medians on everything, I like to see confirmation on two lines. And this is really what this does for me. But moving into this a little bit deeper is that if these two lines are in agreement, and I can kind of roughly trust the regression, It means that I have a predictability on the regression, because what I can do is I can start to look not just necessarily at where the dots fall, but where the lines are, and say, for this price, if, for example, spot happens to be at 24.70, I can expect that the average price based off of this regression for a 1 generic ounce of silver will be about $29.99. So it'll be about $30. Is that going to hold true? Well, probably not right now. And the reason for that is because we're seeing, even down here on the 19th, we're seeing the 20th, we're seeing the last few days down in this area that are under the line. So that makes a big difference. We can see that under a new trend, let's zoom in on this just for the last, say, 2 weeks. So we can see that this looks entirely different. And we can say that, as the price is actually at $25.15, the actual retail price is $29.99. So we just saw a previous regression looking at all of the data that put the retail price at $29.99 when the actual spot price was about $24.70. However, right now, when we focus in and we look at it, where really that other grouping of where real retail starts to come into play over the last 2 weeks, we see that regression changed. So it all shifts based off of the data and the regimes. And it's something that's kind of funny as we look at this, that the 1 ounce generic doesn't really provide us a significant amount of insight. For that, I'm going to pull up, something like the Silver Eagle. This is completely different than what we saw previously. And even this fuchsia line kind of represents that. We have data all over the place. And the reason for that is because this is a much more price-sensitive product than the generic silver. Generic silver is grouped, has a very strong trend. It really is directly correlated with spot price in a very direct way. The Silver Eagle, we can see, has different shifts. So we have, regime, we've got that. We now have this up here, and then we've got this big section in the middle. This makes it much more difficult to kind of look at with everything that we're doing. How do you predict that price? Where's that price going to be going? And what's it going to be doing, at any given moment? So this is where it's important to really kind of zoom in and look and see, okay, where are these things falling? Now this is where the line gets a lot straighter. We've kind of zoomed in on a single regime of pricing, which, this kind of incorporates the last 2 weeks worth of data. So we can see that based off of this, that if all of a sudden the price happens to drop to, we'll say, what is that, about 24.30-ish, we can see that the average price of an ASE will probably be about 39.50, so somewhere in there. And even if we're going further, we can see that at, 26.91, the average price is probably going to be around 42.74. As we saw previously, how long will that price regime last? Will there be a different grouping that establishes itself up in this area, or will it come down further, or where is that actually going to happen, and where's it going to go? So this is kind of the challenge in it, but it's just understanding what prices exist at the given moment. There's a lot of data here, and there's a lot of analysis and everything else. But at the end of the day, you have to get a good feel for what's a common price. What's a good price. And the only way that you can really come up with that, you can't do it in a vacuum. Because as we've seen, I'll go back 3 weeks and just to prove this point a bit. 3 to 5 weeks. So the price sensitivity that you might have internally between 3 and 5 weeks ago isn't applicable to today. It's shifted. It's different. And part of that is just because of the fact that some of these products move, some of these products get priced in different ways. So the last one I want to look at is just, the Canadian maple leaf, because, that's kind of where we started out. And if you weren't noticing, that I switched that, you might not realize that it's that much different, because it has a very similar type of arrangement to the ASE that I just had pulled up. And we can see that there are certain pricing regimes that occur. We have this that was back from mid-April. Then we got into, July now. We're down here with the last couple of days of July. This was from, the 16th. So there's a pretty decent distribution here, even though the prices are pretty similar to each other. And I just want to do this and that's a straight line. So as spot exists at the exact same point, we can see two different pricings 2 days apart that are pretty significant. I mean, at this point, the price was $33.66, and at this point, the price is $34.46. So we're up 80 cents in 2 days. So that's the type of change that really has to be watched and carefully watched. So where can we say that silver is going at this point? Well, if the retail price or if the spot price continues along the same trajectory, if we see this kind of hanging flat, we're going to see, and that's based off of, this data, things like that, we're going to see that the price is really going to remain consistent. It's going to remain correlated. There's nothing that's in the stars or anything else that's saying there's a big change ahead. There's nothing that's signaling some sort of a sea change or a shift or anything like that. We're seeing slight declines in absolute price, but then again, at the same point, we're also seeing a slight increase in the absolute percentage of margins charged between spot and retail. So no matter where the price goes, if the price continues to go down, you can expect a proportional decrease. If the price reverses and starts going up again, then we'll have to take a second look at this and reevaluate. However, my gut feeling is that we're probably in a range where about $4. If we're between a spot of $24 and a spot of $28, that the price regime is going to remain pretty much about where it's at. Over the last several months of data that's been collected, I haven't seen too much that indicated a shift. There's been momentary shifts. There's been daily diversions and distributions and things like that. But there hasn't been a significant amount of will to really shift the entire market in one way or the other. That's really what I'm thinking that you can expect. Is silver on sale? Yeah, it is. You can look at this in a similar way to anything else. Figure it like a late 4th of July sale that we're getting, about 15% off the normal retail price. It's not a bad discount for the items that we want, anything else. And at some point, it's going to go back up again. It's just the nature of the beast. There's nothing fundamentally that says that we're headed towards some major crash or anything like that. There's also nothing that says we're headed towards the moon. That there's nothing in the charts that say that. However, 28 to 30 mark is a very natural and pretty much expected price point that eventually we're expected to see based off of most analysts' assumptions and also my own. So we can say that right now, we can purchase at a discount. So if you're currently stacking on a schedule, continue stacking on that schedule. If you're thinking about making a purchase, now is not a bad time. It seems as though the markets are holding pretty flat. So therefore, it doesn't look like there's going to be too much more of a downward trend. I don't want to say this too soon, but it looks like maybe the markets have bottomed. But of course, it's hard to say. We're in a crazy, crazy economic world right now, and every day brings new challenges. But with all that said, you got to stack your own stack and really shoot towards your goals. So until next time, happy stacking.